Let's talk about crypto and regulation. Today, a hotly debated topic that truly will shape the future of the blockchain industry and the global financial system for decades to come. The famous saying goes, first they ignore you, then they laugh at you, then they fight you, and then you win. Well, my friends, most indications point us to now being in the second to last phase, where they fight us, with governments and financial institutions worldwide sounding the alarm around the risks of Bitcoin and crypto, while touting the benefits of their own Central Bank Digital Currencies, or CBDCs. Ultimately, Bitcoin and crypto will threaten institutions of power, including the ability of governments to spy and censor financial transactions. Preserving power for itself against the threat is a natural reaction by regulators, central banks, and governments, and we should not expect anything else toward the blockchain space. Following the FTX debacle, many lawmakers in the US and around the world see the meltdown of one of the largest centralized exchanges as an opportunity to impose aggressive regulation that would hamper the adoption of crypto as well as stifle innovation of the blockchain space. But in reality, the FTX fiasco had less to do with Bitcoin and the crypto industry as a whole, and instead had everything to do with a group of individuals' decision to commit fraud by using customer assets to fund their hedge funds' risky market bets. This is illegal in the worlds of both fiat and crypto. Nonetheless, consumers are hurt and are in pain, and regulators will use this moment to target the industry. And independent, the debate around regulation has now reached a pinnacle. So let's look into why regulation of crypto is so important for the future of the industry. Firstly, the lack of clarity around crypto regulation, specifically in the US, has pushed major players offshore, and many institutions around the globe are still on the sidelines to enter the Bitcoin and crypto market, waiting for clearer regulatory regimes. So, in short, what exactly would and could crypto regulations target? Licensing and registration. Regulators will likely require businesses that deal with cryptocurrencies like centralized exchanges and merchants that accept cryptocurrencies for payment to register with authorities and possibly apply for a license to operate to improve financial oversight. KYC and AML requirements. Most centralized businesses that deal with cryptocurrencies are today already implementing Know Your Customer and anti-money laundering procedures to help prevent illegal activities such as money laundering, financing terrorism, or violating sanctions while adhering to local laws. Although centralized entities like exchanges already have KYC and AML processes in place, the question of identity verification in DeFi, an inherently privacy-focused sector of crypto driven by code and without middlemen, remains hotly debated, and it's still uncertain how regulators will try to tackle DeFi, self-custody wallets, or other privacy enshrining tools. Then, there are the questions of consumer protection, reporting and disclosures to relevant authorities, and capital requirements, the latter of which would ensure that businesses maintain a certain level of capital to protect against potential losses and ensure their financial stability. This specifically would aim to protect customer funds against the risks of insolvency or bankruptcy, such as the case of FTX. Additionally, Bitcoin mining might get regulated for how miners report their operation and around their usage of the energy grids in relation to local communities. Then there is the matter of which financial watchdog or institution has jurisdiction over which segment of the crypto market, and the list goes on. In conclusion, regulations are coming, whether we like it or not. And as an industry, we need to work with regulators and keep the dialogue going with both national and international bodies to ensure that the eventual legislations are in favor of innovation and sovereignty. But in broad strokes, in order to make crypto reach the legitimacy to achieve mass adoption among the world's population, businesses, and organizations, regulations are, in my opinion, needed. The trillion-dollar question is whether they will enshrine protection of the innovation that is happening in the space or be overreaching, setting back the space with too much red tape and further pushing companies to friendlier jurisdiction. Only time will tell. If you enjoyed this video, make sure to like, subscribe, and leave a comment below. We'd really appreciate it. Have a great day.